Hello, investors and traders, and welcome to the weekly market report with the Market Guys. I'm AJ Monty. This is a one-year daily candle chart of the Dow Jones Industrial Average ETF, ticker symbol DIA. And I've left my lines on the chart from last week, as I do each and every week, so that you can see how accurate technical analysis is when used as a forecasting tool. Now, at the Market Guys, we forecast the markets using candle charts, but also understand that this tool is also one of the best to be used for risk management. And today, Friday the 22nd, as the markets closed on a sour note, the pressure was still on the downside. As I zoom in here, again, you'll see that my forecast from last week was that we would move up early in the week. We did that on Tuesday, and then we proceeded to sell off, with the end of this line right here being my target. So not only did we hit the target, but we surpassed it, and this big long red candle is showing higher volume. Now, what does that mean for next week? Well, if I back out just a little bit, you'll see that there is a support level down here from the lows back on February 8th. I do believe that the markets will move down early in the week to test that low support level, but towards the end of the week, I think we're going to see a bounce. More or less the opposite of what we've seen this week, where we had early rally to sell off later in the week. So that's for the diamonds. Let me just extend that just a little bit further out so you can see exactly where that support level is, and I'll leave that in place for next week. Now, if I look at the Russell 2000, which is a more broad-based index, ticker symbol RUT, again, my forecast lines are in place. I said that we would move lower. Look at that. It's as though the market was following my lines exactly. I said that we would move lower to test this support level. We're not quite at that support level, but I'm going to erase that for you because I think the Russell 2000 is showing a lot more momentum to the downside. So I'm going to draw this as a support level right there, right around 1450. I think next week the Russell 2000 will again move lower, and then I think we can see a possible bounce. And then we'll have to see the week after whether or not we continue back on the track to test that support level. The stochastics oscillator is crossing with a sell signal, while the CCI down here is still showing downward momentum. However, the CCI is already in an oversold condition. This K line, which is the blue line, that is the more sensitive of the two. I think that will move down to an oversold condition, with the red line being the percent D, is more or less the 3-period moving average of the K. I don't want to make that sound too complicated because it's not. These are indicators that we rely on here at the Market Guys, and they've been very effective, again, with forecasting the market. Now let's hop to the spiders, ticker symbol SPY. You'll see that we did not hit my target, but we are right on track to hit my target, the end of that line being the target. This red candle from Friday the 22nd is also on higher volume. The high volume is significant because that tells us the sellers are becoming more motivated. Stochastics are crossing with a sell signal. The CCI has already crossed with a sell signal and moving lower. And therefore, I think next week we could see lower prices in the spiders to move down towards that support, just like that. So I'm going to erase this line, keep the charts pretty clean. That's my forecast line for next week. Keep your eye on the Market Guys website for updates along the way. Now, I'm going to hop to the VIX because last week I did not talk about the VIX, kind of ran out of time. I try to keep these reports to 8 to maybe 11, 12 minutes max, and we started to go over, so I cut out the VIX. But on Monday, when we had our open house Q&A session with our members, I did forecast that the VIX would move higher, and that just supported my idea that the general markets would go lower because the VIX is inversely related to the S&P. This is the new resistance level for the VIX, but I think we're going to go a little bit higher, testing that resistance on the VIX before it's all said and done. The VIX is still showing a good strong green candle, therefore the momentum is still heading higher. So I'm going to move that up just like that, with the end of the line being my target for the VIX. Now finally, the Qs. Out of all the indices, the Qs seem to have done the best. Even though we had a red candle today, we continued to rally throughout the week, and Friday was really the first big down day where we had a lower high. So all I'm going to do for the Qs is take this line and move it over and readjust it so that it shows the end of my target right there, the end of that line. That target level is what I think will hit next week before this gap ultimately is filled. There is a chance that gap could fill. Once a gap fills, there's an 80% chance that the prices will reverse and go the other way. So again, eventually at these levels, I'm expecting a bounce. See, again, it's not to be too redundant, but all the markets are showing a higher red volume, which again is supporting pressure on the sell side. Stochastics are crossing with a sell sign, so I think that's going to go lower. CCI is now crossing with a sell signal here. I think that too will go lower. So let me erase this line, and I will erase the line prior here on the CCI to, again, keep the charts clean. Last week I mentioned that all the spots in the mentor program are filled now for the spring season. However, there is a waiting list. It's a short waiting list, but there will be a waiting list coming into the summer session, which begin at the end of May, beginning of June. If you are interested, I can give you a written guarantee on the performance of that, so you know exactly what you'd be getting for the money. The only qualification that I have is that you need at least $100,000 in your trading account to be worth your time and effort. I have many students that are willing to give you testimonials to the performance and the success that they've had. And again, I welcome you into our program if you're interested. So that's it right now for the market, guys. Have a great weekend, and we will talk to you soon. So long.
This video segment is a small part of what the Market Guys offer through their educational products and services. If you are interested in any of our Trade Alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.